Look forward, GM, 20 hours a week. Since then it was days free. Backtesting is our most likely to change. When backtesting is important, exclude trades on Thursday and Saturday. Not really. I mean, yes and no. A lot of times you can say, okay, exclude the hours and times that you're not able to be on the charts. But if it's a generalized system, right, let me put it this way. If you can't trade on a Thursday, then, and you're trying to trade like New York Open, then you should filter out Thursdays of New York in your backtesting. Because the Thursday could have some very real intricacies about it. That's like scenario or event based, right? So if you can only trade Monday, Tuesday, Wednesday, Friday, and you're doing your backtesting, don't include Thursday in your New York Open analysis. But if your system is a general system, and it's like break of structure, moving average crossover, that's not really going to be different on any different day. So you can just test it 24/7. And yes, you're not going to trade Thursday. Yes, there will eventually be a trade on a Thursday. But it's not like that moving average crossover was anything specific to Thursday. Do you understand? It doesn't disprove the system. Yunez, golden zones, no. Doesn't, in my experience, doesn't matter. That's a really old logic from Forex. And when I say old logic, I don't mean that it's not applicable to Forex anymore or whatever, because I don't trade Forex. But in crypto, no. The moves in crypto are randomly distributed throughout the day. Yes, off the daily open, you're more likely to have a move. And yes, New York Open, you're more likely to have a move. Sure. But very, very often, believe it or not, not even believe it or not, but like, you guys will know this. Quite often, New York will do nothing for 3 hours and then it'll explode into life. Like, whereas like, go back to some of these previous days. 1:30. Now it moves a bit more early. I mean, I know this from trading every day, right? Like here, there's New York Open. There. Move down, move up, move down, move up. Nothing happens, nothing happens, nothing happens. And then the breakout happens at 6:40. So 5 hours later, it actually breaks down and goes into a nice downtrend that goes all the way into the next morning. So in crypto, golden zones aren't as impactful. Mohammed, 50, 100, 4-hour charts, bands, 15-minute. Same values. Yeah. Just do this. Don't use I don't know about this combined indicator. I don't use that. I use this. EMA 50. Oh, by the way, I think I must have update available. There we go. So that's why I wasn't able to see the daily opens. Anyway. Just take this one, right? 50 EMA, boom, time frame, 4 hour. That will then pin it to the 4 hour. If you put it on time frame chart, it will be whatever time frame you're on. So just add a 50, 100, 200, put them on 4 hour and leave them on your chart like that. Mill pipe, price is trending, mix higher lows, days when chances high retest. Price trending bearish, wait for resistance to be formed, then sell. Pure PA, what do you think? Yeah, good. I don't talk much about system ideas because testing will tell you more than I can. How does it back test? And how does it play out in forward testing? How much trade should I take per day if it there's no amount. Back to what I said before. No, there's no specific amount. As little as possible though. You want to make as much money as possible in as little time as possible. Because every time you're in a trade, there's risk. Risk of mistakes, risk of sudden market movements. If you can, you want to get in and out fast. Now, that does not mean you try and do 6-minute trades all the time. It's not that. It's about being more selective. Random weekly schedule, get 2 consecutive days off. Is appropriate to be day traded during those days. Yeah, if it's Monday to Friday, should be fine. Klaus, swing trading, we get a few chances in 2 weeks. Focus building system, big R's. Second name is swing trader. Because don't much time at school. No, don't. So it's a great question. Don't try to build a system with big R's. Do not target risk reward in a system. You should target a reason to exit, right? If you get in because the bands cross green, you get out when the bands cross red. And hopefully when you see in your swing trading results that whenever the bands cross green, they tend to stay that way for a long time, right? And what you should see, hopefully, you're not trying to get a 10R, but if you enter and exit when the bands cross, and you enter here, right? You obviously, there's a false start here. You enter this one, but look at this one, right? Then the bands cross green again. You enter there. Your stock goes below the low, and you exit whenever the bands go red, right? You get a 5R. Right? You don't try to get the 5R. The market just gives you it. So, yeah, don't focus on that. Should you day trade in those holidays? Every month and a half get 2 weeks holiday. Up to you if you want to. Fritz Big, how does it work with the system to predict price 3 seconds? Come out fees. You can never earn enough to cover the fees. Size. It's just sheer volume and size. Also, market makers have VIP, like top tier VIP deals with the exchanges. Because they trade so much size, they have much lower volumes than us. And they always use limit orders. Like the way a market maker makes their money is they provide liquidity on both sides of the spread. If you think of it very simply, whenever you go onto an exchange, if you're going to like buy Bitcoin, right? You could buy Bitcoin at, 40,000 exactly, right? That's the bid. The best bid is 40,000. The best ask might be 40,003. So if somebody wants to buy right away, they have to pay 40,003. If somebody wants to sell right away, they have to pay 40,000. That's market orders. What a market maker will do is they will provide this liquidity all day. They will always be there to buy at 40, and they'll always be there to sell at 48.3. And if they just do that over and over all the time, that's what they're trying to do. They're trying to capture a spread. That's what market makers actually do. And when you understand that, you'll understand why this idea of market makers manipulating price, anyone who says that is low IQ. If people tell you that market makers manipulate price, that's not their job. That's low IQ, conspiracy bullshit. People who don't actually understand what trading is, don't understand market structure, microstructure of a market, don't understand flows at all. They have no idea. They don't understand order books, any of that. They're just LARPing bullshitters. Are there market makers who have been scammy and manipulative? Sure. There can be bad people in any industry. There can be bad actors in any industry. People think that as soon as the market goes down, big dump, like, oh, the market makers must have made loads of money. They hunted the stops. Absolutely not. The absolute ideal scenario for a market maker is for the market to do that forever. If the market just went between 40 and 40.3 forever, and they were constantly providing liquidity on both sides, buying and selling and taking that tiny little bit, that's reliable, consistent, low volatility, easy to manage risk, and they just print. The only people who print in these dead sideways markets are market makers. They're the only ones that have the system set up to capture that tiny spread. When the market goes suddenly from 40k down to 38, that's bad for them. They could have a lot of inventory on their books. They could have a lot of coins, and they have to now re-hedge, and they weren't planning. Like, it's hard for their system to plan for a sudden sharp move. It's so fucking retarded. Any actual market maker does not want this massive volatility. That's why you see it. I know this fucking rant's coming out. The reason why, when a big liquidation starts to happen, it gets even greater, is because the market makers take liquidity away. They only want to provide liquidity if it's in a nice tight zone. If it starts to, the spread, if the spread blows out, they get out of the way, which makes it worse. They stop providing liquidity because they don't want to buy, right? They want to buy 40 so they can sell it at 40.03. If it suddenly drops and keeps dropping and dropping, they don't want to buy as much because it's not going to go up to let them sell. If it's all just sellers, they can't get back out. So, anyway. And that's it. I can't really cover much more. Good pass. What pass setup high probability out of turn? Don't know, bro. That was just an example, Akenrod, hide side to side. How do you set your trades to take advantage of intraday volatility, watch a market move? Well, I covered that in the lesson. All you're doing is you have to build a system and stick to the system. Whether it's a backtested system of basic technical analysis, whether it's a day trading system based around the Daily Open, New York Open, whether it's trading around breaking news, or CPI or NFP or any of these, you just build a system, you backtest it, and then you run it. Time frame for scalper, again, don't be a scalper, right? Just don't be a scalper. Like, saying it like, I don't mean that, right? How do I say this? When you ask me what the best time frame for a scalper is, it tells me that you shouldn't scalp. It's not about time frame. scalping is it's a style. You're trying to catch a very sudden momentum move, right? So how do I explain this? I've explained this a bunch in the past, but like, right, going on one. By the way, yeah, if you're going to be scalping, it's 1 minute chart. What are you doing on a 15-minute chart as a scalper? It doesn't exist. You could be in and out of 3 trades in a 15-minute candle. So there's some scalpers use 1 second charts, 15-second charts. And for the vast majority of people, that is not an optimal way to trade. But anyway, so what a scalper does is a scalper is trying to get into the moves that never pull back, right? They're trying to catch an ideal entry for a scalper is like here, to where they've identified momentum and it never pulls back. And it just moves in their favor straight away. It's pure momentum. What somebody might have done, which is equally as valid as a trade, is when the market broke down there and retested there, they would enter a short at that point. And they put their stop loss up, whatever, here. And then price comes all the way down here. So both of these trades, right? Both of these trades are valid. Both of these trades are in profit. This one is a day trade, though. This is not catching momentum. This is the opposite. It's actually entering on a retest. Whereas the scalper is trying to spend as little time in the trade as possible, catch the momentum, and it moving almost immediately in their favor. It doesn't mean it can never, sorry about that, it doesn't mean it can never move against them. That's not the point. But it's almost immediately going to move in their favor, right? Split risk between trades, average day trades is 2. Yeah, correct. If you take on 2 on average, half per trade, yeah. Knowledge addict, is that daily open indicator just select the time zone? You'd have to ask greatest username, but you should only be using, guys. You should only be using UTC as a crypto trader. I know you don't live in that time zone, neither do I, but the daily open is always 00 midnight. The 4-hour candles, very specific. The 4-hour candles are 4 a.m. UTC, 8, 12, 4, 8, 12. All the important. The weekly open, the New York open, the London, all of these standardized timeframes are UTC. Noble Warrior, should we follow the workshop? In white belt? No, in white belt, just focus on white belt. Once you get to blue belt, dig into more of this stuff. Dragic, aim for day trading 5-minute chart, building a mean reverting system and ranges. Does that make sense since you give examples for trending system trades, catching momentum moves? Yeah, for day trading, and I'll probably do a mean reversion workshop, which will cover this. Maybe I'll do it next week as the next one. But yeah, mean reversion is totally fine for intraday as well. Less. I prefer, like, here's a good example, right? Here's a day where we had, well, I mean, it's not an amazing example, but this is an example of a mean reversion move. Sudden pump up, finds weakness, starts to break down, you trade it back down, right? So as a mean reversion trader on a day trade, you're trying to get in somewhere around there, and you're trying to trade it back down into the support. That'll be more of a scalp. It's a very, very low time frame. But yeah, in general, stuff like this, right? When the market moves all the way up and then it fails to go higher and it starts to break these structures, you know it's going to go back to there. That's where it's most likely to go back to. So as a day trader, you can trade that mean reversion. You're trying to trade it, I guess, from there back down into here. It's the idea of if it's not trending, it's going to go back to where it started. But yeah, anyway. That's it. GM. Hope you all enjoyed. GM. And this, the recording will be up for 24 hours. And then it'll be gone forever. And I'll see you all on next week's one as well. But of course, I'll see you tomorrow. We'll do a crossover stream tomorrow with Professor Ayush. Don't miss that one. I mean, we have an absolute fireworks market at the moment with TradFi. So I want to ask Ayush about stock market, bond market, the VIX, all this madness. What does he think of it? Are we going to 0 or are we going to 100k? Let's go. See you all tomorrow. GM, thanks for joining. Talk soon.